Shares of Broadcom skyrocketed this week, up over 26%. The company now sports a $1 trillion valuation. And on today's show, I'm going to show you evidence that this stock is likely going to go much, much higher. In fact, we could easily get to a $2 trillion valuation, maybe even potentially a $3 trillion valuation, which means shares would double or potentially triple where they are today with Broadcom. So if you want to potentially double or triple your investment in Broadcom, pay attention to today's show because we've got a lot to cover. This is after the company announced their earnings and, more importantly, on the conference call, gave a set of guidance that is so rosy, I almost have to change out my regular glasses for sunglasses because this is absolutely extraordinary. In fact, I haven't seen this type of guidance since NVIDIA's blowout guidance a few years ago after AI initially started taking off. We'll talk about the importance of this and what it means for Broadcom. Now, other semiconductor news this week, we have some Intel CEO news. We'll talk about that. We also heard from Supermicro Computer. Why Broadcom is absolutely skyrocketing, Supermicro shares went down about 20%. We'll talk about some of the things that the company did this week, which cause us even more concern about this company going forward. And the main beneficiary of all of this is probably Taiwan Semiconductor, and this company is not worth $1 trillion. So we'll talk about the opportunity there, and we'll look at a few of these stocks technically. What is going on, investors? Hopefully you guys are doing well out there. This is the Semiconductor Recap Show here on Equity Empire, where we recap the semiconductor business every single weekend. Now, Broadcom shares, the semiconductor stock of the week, up 26% after the company announced their earnings. Now, year to date and over the past year, shares of Broadcom are up 100%, which is having investors wonder if this is the time to take profits on Broadcoms. Is it too late? You didn't own Broadcom, you're seeing shares skyrocket. Now, if you don't own Broadcom, how can you consider yourself a loyal subscriber of the channel, considering 3 weeks ago, we posted a video here on the channel saying that 3 stocks that have almost zero risk after NVIDIA's drop, and on the thumbnail, let alone the content of the video, the first stock that we covered was Broadcom. And if you took advantage of that, you're up big time already. But I'm here to tell you that if you missed out on our call last couple weeks ago, it's still not too late. It's still not too late. I think potentially you could double and triple your money in Broadcom going forward. Here's why. Now, we've got a $1 trillion valuation now, but as you know, this company's in the thick of things when it comes to custom AI semiconductors. The company calls them XPUs, and Hock Tan on the conference call. And this is when shares initially, when Broadcom reported their earnings, shares of Broadcom were up like 4 or 5%. And then Hock Tan got on the CEO and he got on the conference call and shares skyrocketed up over 20%. And it was after he said this sentence right here. He says, as you know, we currently have 3 hyperscale customers. Hyperscale is just a fancy term for Microsoft, Google, Meta, Amazon. And he says who have developed their own multi-generational, which means year after year after year, they're going to have improvements on these things. XPUs. This is just a fancy term for a GPU, basically a data center chip. So they have a roadmap to be deployed at varying rates over the next 3 years. In 2027, so about 2 years, maybe 3 years from now, we believe each of these customers plans to deploy 1 million XPU clusters across a single fabric, basically meaning they're going to stuff these things all into a data center and link them all together and create some AI products out of it. We expect this to represent an AI serviceable revenue, or AI revenue serviceable addressable market, or SAM. So there's TAM, which is total addressable market. Broadcom is calling this SAM because these are the 3 customers that are working with Broadcom. And he's saying for XPUs and network, which is the networking of these XPUs together, which is Broadcom is an absolute leader in the range of $60 billion to $90 billion, not over the next couple of years. He's saying in fiscal 2027, Broadcom might do $60 to $90 billion just on XPUs alone. Now, to give you an idea why this is so extraordinary is in the most recent quarter, the company recognized semiconductor revenue, and this company has a couple of different semiconductor businesses. They have kind of what I would call like a trailing edge, stuff that's going into cell phones, stuff that's going into AT&T and Verizon type of networking stuff, and they have this AI revenue, and they actually break it out for you. And this is what's going to be so extraordinary. The most recent quarter, their semiconductor revenue came in at $8.2 billion. Now, this is all semiconductors. And again, the CEO got on the conference call and says 2 years from now, they're going to do maybe $60 to $90 billion. Now, this they explained on the conference call, this is service addressable. They're only going to get a portion of this. But we all know they are closely working with these companies. Also, the other thing that you know about the semiconductor business, it's not like enterprise software where you could spin up some software right now in your sleep and start selling it. No, to make custom XPUs for AI, there's like 2 or 3 companies in the world that are able to do this. And there's one that is the best and already has these clients as customers, and that is Broadcom. And so their entire semiconductor business in the most recent quarter did $8.2 billion. And it grew 12% year over year and about 13% quarter over quarter. Now, here's more interestingly, though. Their AI revenue, which is going to include the 60 to 90 billion potentially in 2027, that grew 150% year over year to just $3.7 billion. So you want to annualize that out. We'll give them credit for 4. The company is currently doing less than $16 billion worth of yearly revenue on these XPUs. And they are just telling you right now in 2027 that their service addressable market, which they're not going to capture the whole thing, but let's assume they capture a large percentage of it because there's really not that many other companies that can service these large clients. They're saying that that market could be worth $60 to $90 billion. So this is why shares skyrocketed. Now, they say non-AI semiconductor revenue declined 23%. So again, the trailing edge is going out and the leading edge is going in. Now, they gave us guidance for Q1. They expect semiconductor revenue to grow about 10% year on year to about $8.1 billion. They say AI demand remains strong, and we expect revenue to grow 65% to grow to about $3.8 billion. So this company is not even on a $4 billion run rate per quarter, and they just told you that the addressable market, at least in 2027 alone, is closer to $20 billion a quarter. So it's going to 5x. And this is absolutely extraordinary for Broadcom because don't forget, Broadcom has another business as well. It's called infrastructure software. This is a $20 billion a year business. In fact, the entire semiconductor business for the company over the past year did $30 billion worth of revenue. The software business was $21 billion. The total revenues produced by Broadcom over the past year was $51 billion. Again, I want to emphasize this. Broadcom's total revenues for this past year was $51 billion. Their semiconductor business did about $30 billion of that. The CEO just got on a conference call and said for 2027, their serviceable addressable market, which many believe they'll be able to get a large chunk of, is $60 to $90 billion. In fact, an analyst on the conference call estimated that Broadcom might capture 70%, 70% of this $60 to $90 billion. So I'm not a math whiz, guys, but this company did $51 billion in total revenue this year. And in 2 years, analysts are projecting $60 to $90 billion in revenue just on AI. And the company will capture maybe 60, 70% of that business, even if they only capture 30 or 40%. You have to also remember this company has infrastructure software business, which continues to grow. This is why we recommended Broadcom several weeks ago. This is why this time last year we recommended it to my former employer as well. And this is why today, even though shares are up 100% and we've got a $1 trillion valuation, if portions of what Hawk Tan say come true, then you have a stock that will get meaningfully higher over the next year. Now, it will likely not be a smooth road. He said there'll be some lumpy quarters because when you're building out a 1 million XPU cluster, it is difficult for these companies to not only pull that off, but remember, Meta has shareholders that it has to answer to. Amazon and Google have shareholders that they have to answer to. They can't just spend all this money in one quarter. They might have to put a project off or release it in stages. So just understand that this growth not necessarily going to be linear, but Broadcom will probably put up some very hefty quarters and probably surprise to the upside just based on what the CEO said here. So take all that information for what it's worth. You can do the math on a company that is doing $50 billion in total revenue now, and they're saying just a portion of their business. In fact, it's about only 50 to 60% of their total business is going to balloon in 2027. Again, you as an investor have to make these decisions, but the decision is not very hard. Now, moving over to Intel. Shares of Intel are sliding. It's starting to look, Intel's looking interesting. It's going to start looking interesting at these levels because you only have an $87 billion valuation on this one. Okay, we just talked about a company that's worth $1 trillion. We'll talk about Taiwan Semiconductor. That is worth like $800 billion. We'll talk about Super Microcomputer, which is like darn near on the verge of bankruptcy in some cases. That's worth $20 billion. So Intel at an $87 billion valuation, starting to look a little tasty, and technically it's starting to look interesting as well. Now, the former CEO asked people to pray and fast for employees. And I saw people, criticize this guy. I mean, I think religion, at least here in the West, here in the United States, is downplayed a little bit. I respect the guy for this. Nothing wrong with a man of faith. Nothing wrong with a man asking for prayer and fast. I mean, look, if you're hungry, I think you should eat. And look, eating food is a blessing, but certainly, praying for people that have lost their jobs, there's nothing wrong with that. Now, we have two co-CEOs over at Intel. They're saying all the right things right now, but if you look into who the co-CEOs were, one of them has like a background in finance, and the other guy was basically like the CFO. So these are like two finance people running Intel. The longer that those people stay in charge, I think Intel will clean up its finances to a certain degree, but there's no confidence that these people know anything about designing semiconductors, certainly competing against like NVIDIA, come on, AMD, Broadcom. I mean, these companies are run by elite level CEOs. That's what Intel is up against, okay? They're up against Jensen Huang, Lisa Su, and Hock Tan, which are literally, if you were to make a top 10 list of CEOs in the world, all three of those would make it in. And if you go to the top 5, you could make an argument that all three might actually be in the top 5. So this is what Intel is up against, and they have a pair of co-CEOs that know about the semiconductor business, but they're finance guys. So this company is having to look for a new CEO candidate, and the one that is at least being floated as a rumor right now is a gentleman called Lip-Bu Tan. I don't know if I said that right, but Mr. Tan has ties to Intel as he resigned voluntarily, I think, resigned from the board of directors in August. So it just shows you this guy really cares about the company. And he joined Intel's board about 2 years ago, but he was at odds with Pat Gelsinger. And if you know me, maybe you've just kind of tuned into Equity Empire, but over on the investor channel, like I don't get along with Pat Gelsinger. Okay. Like me and this guy would get in a room and, we would have professional disagreements. Okay. It's not like we would fight. I totally respect this guy. I'm praying for this guy and his family too, but we would disagree a lot on business. Now, Mr. Tan, who's potentially maybe the candidate to become CEO over at Intel, he and I might get along because he and Pat, they disagreed about the size of the company's labor force, its risk-averse culture, and its AI strategy. So this guy looks like he's got his finger on the pulse. He cared enough about Intel to actually resign from the board. And look, if you've ever had a board seat, it's like one of the most cushy things. You get paid, you get stock options, you barely have to do anything. And so like he gave that all up because he saw that Intel wasn't going in the right direction. We'll see if he comes in. Now, company not going in the right direction is Supermicro. Over the past 5 days, down about 21%. I don't think this includes an after-hours move, down another 6%. We'll see if this follows through next week. I mean, this stock is like a yo-yo. It's going to go up or down. But It went down initially this week after the CEO said he was, quote, confident the stock won't get delisted. I tell you what, guys, if you have any sizable position, not just super micro, but if you have a sizable position in a stock and the CEO has to tell the media that, oh yeah, I'm confident that it doesn't get delisted, you might as well take that money that you have invested in the company. You might as well withdraw it and go to Vegas and have a little bit of fun, because that's basically what you're doing here. When a company's executive is just only confident, just a little confident, and people have to ask him about his confidence level if the stock is going to be delisted or not, you're gambling. You're gambling. And now some of you out there, you want to gamble, and that's totally fine. If you want to use the stock market as a way to gamble, by all means, go ahead and gamble. And do that for a long period of time. And then contact me in 2 or 3 years and let me know how that's worked for you. The rest of you, if you want to make educated decisions, and some people might say educated bets in the stock market, you can do that. I showed you Broadcom earlier in the show. Now, the company has hit up Evercore to raise capital. I don't think this comes as a huge surprise, but it is a little bit of a red flag. The company did close out its loan. We talked about this maybe several weeks ago here on the channel. Supermicro had a loan at a bank, and the bank saw what was going on with Supermicro. They might get delisted. They hadn't, released a set of audited financials, and they owed this bank a lot of money, like hundreds of millions of dollars, or at least they had kind of a line of credit with them. And so the bank said, hey, you've got to keep money on deposit over here, and we're changing kind of the covenants or the terms of this loan. Well, about a week ago, Supermicro decided to take the cash that was sitting on the company's balance sheet and go ahead and pay that loan off. But this company has a lot of working capital constraints, okay? A customer comes in, for example, maybe a hyperscaler customer that's trying to spin up a 1 million XPU cluster. Well, they might contact Supermicro, and before Supermicro gets paid, the company needs to kind of, get a bunch of equipment and get a bunch of employees and get a bunch of stuff ready to build this cluster. So the company has a lot of working capital, and we've seen this from an operating cash flow perspective. While the company's revenue has skyrocketed, the cash flow has actually been negative over at Supermicro. Also another reason why I wouldn't invest in this company. But they've contacted Evercore, which is kind of a independent banking advisory firm, and they're looking for a public equity or PIPE investment, and they're looking for firms to participate. So what this could potentially mean is further dilution, because typically if you're going away from banks are just going to loan you something and maybe take, your equipment or your factories or whatever as collateral against the loan. Well, these banking advisory firms, they might want an actual equity stake in the company. And given that the fact that the CEO is only kind of confident that the stock might get delisted, it might be complicated raising money. So we'll see what happens with Supermicro. But again, if you own this type of stock, you're a gambler. You're not an investor. Now, speaking of good investments, probably Taiwan Semiconductor would be right up there. Shares were flat on the week, but the company releases their monthly sales totals every month, like right in the beginning. And we got November numbers. They soared 34% year over year to a Taiwan dollar figure here, which we could convert into American dollars, but all in all, you soared 34% year over year in terms of revenue. However, month over month, you had a little bit of a decline by about 12%, but I think some of that could be attributed to like Apple. So this makes all of Apple's semiconductors, and Apple, obviously, as you know, rolls out a new phone, and they probably start making these chips towards the, the spring and summertime. And so there's kind of this ramp up period, but then obviously Apple kind of gets a gauge of demand. And so you could have that business start to slip off as you move into the month of November. I don't think you've got anything to worry about with that. Now, the company is doing a great job capitalizing on the sovereign governments, including here in the United States, but also in Japan, to make semiconductors inside of the boundaries of those countries. And Taiwan Semiconductor is producing these factories and getting them up to speed just unbelievably fast. And their Japanese facility is set to mass produce chips very, very soon. Now, moving over to the technical segment. Those of you that are fans of the show knows that at this time I would go through a long list of semiconductors. I am somewhat excited, but also disappointed to announce that I'm only going to cover a handful, potentially just the ETFs and NVIDIA going forward. That is because I have a new service launching in January. I already have people paying and testing it for me. And out of the respect for them, we are giving them technical analysis, trade setups, levels to buy. And if I were to give it to you away for free here on YouTube, it would just be it would be disrespectful for them. And also maybe it's not a product that's worth paying for, which I think it absolutely is. One trade, one good trade setup. In fact, just the Broadcom call that we made here on the channel about a month ago could have paid for the entire, multi-year subscription. Now, the SOXX ETF is in a buying range. It's represented by this gold line here. It continues to move higher. I think everything that we heard from Broadcom this week leads you to believe things are pretty darn good. SMH also sitting above a buying zone, also looking very, very good. The stock that is sitting also on a buying zone then I think reacted this week to Broadcom strength. Broadcom strength, not just from a guidance perspective based on $60 to $90 billion. What they are seeing is these hyperscaler customers in 2 or 3 years might not actually have a need for NVIDIA. This is what this is saying. Not a absolute zero need for NVIDIA, but a much less bigger reliance on NVIDIA in a couple of years, if Hock-Tan is correct, and I think he is. So it has NVIDIA testing and level here. Now, does that mean NVIDIA's business is going to go away? Absolutely not. They have sovereign governments, they have Nino clouds, they have other cloud providers, and obviously, in the meantime, they're going to sell a lot of stuff. Now, AMD has fell below an area of support, but it's still, I think you could say, technically sitting on it. We released a newsletter earlier in the week that this was kind of a buying opportunity, although it is teetering on the edge. And then finally, Broadcom broke above the longer-term trend up here. I think we are on this purple trend line. Any pullbacks to Broadcom back to these highs can be bought, but I gave you the fundamental argument that you might not want to pinch pennies here, and the fact that you have a $1 trillion valuation with the semiconductor business likely ballooning to what total revenue is in the current year. So things are good in the semiconductor business. That was the Semiconductor Recap Show. Down below, there are links to the newsletter. I will be sending out a formal letter here in the next couple of weeks announcing our product where we're covering all blue chip kind of mega cap stock. This includes healthcare. This includes technology, retail, a large segment of stock. So if you like our calls, if you've been making money, I'd love to see you over there. We're also launching a small cap service where we're talking about small cap stocks, ones that you might be able to double, triple your money on, little higher risk products. So you got to have the stomach for these types of things. If you stomach super microcomputer investment, that might be a product for you. It's going to be run by a former hedge fund manager and a guy I've been working with over the past year and just seen it firsthand. This guy is like incredible at picking small cap stocks. We'll have a trading stock and we have more for you planned. So that's all on the newsletter. Make sure you sign up to that and we'll get you rolling as we move into the next year. Hopefully you guys enjoyed today's video. Back again next week. Good luck with your investments.